Thinking of exiting your business or taking on a private equity partner to help you grow faster? BizNexus has you covered. Tap into our network of thousands of best-fit investors, acquirers, and proven M&A advisors, and we'll help you begin the relationship confidentially on your terms, your timeline. Learn more at biznexus.com.
Disclaimer from the always present legal team. Podcast conversations don't necessarily reflect the views of BizNexus Incorporated. Everything you hear is informational news and updates from around the industry. We're not recommending any investments. We're not offering any investment advice. Be sure to do your own homework.
Welcome to the Deep Dive, the show engineered to cut through the noise and really deliver the insights that genuinely matter.
Yeah.
If you're navigating the complex, sometimes overwhelming world of private equity, maybe wondering where the real opportunities are actually hiding amidst all the market talk, then you're definitely in the right place today.
Absolutely.
Today, we're doing a deep dive into the second half of 2025, unpacking the key trends shaping PE. We'll focus on, liquidity, the real impact of AI, and maybe most interestingly, how to find that real sustainable alpha in the often overlooked lower mid-market.
Exactly. And we've basically distilled a whole collection of recent insights for you, perspectives from industry leaders, plus a really clear call to action from our friends at Finquest.
Oh, okay.
Think of this as your shortcut to what's truly important for deal makers, for investors, or frankly, anyone curious about these market shifts. We want to connect the dots so you can see why these trends matter for, their future strategies.
Yeah, I'm actually really excited to get into this. Some surprising facts came up in the research, and we want to pull out those actionable insights for you. So let's start with a big one, the liquidity conundrum.
Yeah.
The M&A activity, it's slowed down, right? It's like 15% to 20% down recently.
Mm-hmm. Yeah, that's right. And it's not just a small dip, it's substantial.
Right.
And it's more than just a momentary thing. The interesting part is why. It stems back to the boom years. Deals from, say, the 2021 vintage are coming up on maturity now.
Okay.
But in the slower M&A market, those traditional exits, they're just not readily available. So you get this huge backlog building up.
Oh.
The analysis we've seen suggests it could take maybe 1, even 2 years just to clear that volume. It's a structural thing, a real pileup of assets waiting for an exit.
Wow, 1 to 2 years. That sounds like a massive bottleneck.
Yeah.
So if the usual M&A exit isn't really an option right now, what are firms doing? Or are they just waiting or finding other ways out?
Well, they are getting creative. The sources talk about using partial remedies more often. So you're seeing more partial exits selling off just a piece of the asset.
Okay, yeah.
Or using things like continuation vehicles, secondaries.
Right, those tools.
Exactly. They're seeing more use, and they do offer some relief. But partial remedies is the key phrase there, isn't it?
It really is. Tells you they don't solve the whole problem.
Precisely. A continuation vehicle lets you move an asset to a new fund, basically extending the hold. Secondaries means selling existing stakes. They help manage the pressure, but they don't eliminate it.
Mm-hmm.
And if you look ahead, this leads to a pretty stark forecast for 2026, 2027. A wave is coming.
A wave.
Yeah, with M&A still slow, these exits are just piling up. It could be a massive traffic jam.
Right.
Which means the smart teams, the ones who align their origination with their exit timing right now, they're going to have a real edge. They won't be, stuck in traffic when that wave hits. Stuck in traffic. I like that.
Right.
Really paints a picture. So for you listening, how does this backlog and these creative partial solutions, how might that change the market dynamics? And your own timing for investments. It's not just what, but when, right?
Wow.
And when you plan to get out.
Exactly. Timing becomes critical.
Okay, let's shift gears a bit. Let's talk about AI. Artificial intelligence. It's not just theory anymore, is it? The sources are saying it's genuinely rewriting productivity, driving real gains.
Yeah, absolutely. It's moved way beyond the buzzword stage. And the question is how? Exactly. Vista's Robert Smith has this really interesting take on agentic AI and this thing called the agent admin layer.
Okay.
But what's really fascinating is how it's changing the metrics. You know the old rule of 40 for software companies. Growth rate plus margin equals 40% or more.
Yeah, I know it.
Well, AI boosts both growth and profitability so much, they're now talking about the rule of 70.
70, wow. That's a huge leap.
It is. It shows how deeply AI is affecting Efficiency, scale, value creation,
Yeah.
the whole business model, really, not just one little part. And it's not just talk, right? We have actual examples, like Silver Lake's Christian Lucas mentioning AI automating workflows, improving the user experience, modernizing internal ops, real stuff. And then Bain Capital's James Stevens talking about a 5-year tech overhaul. Big productivity gains, customer gains. They had an AI chatbot cut support tickets by 75%.
75%. Think about that. That's not just tweaking things, that's fundamentally changing how you serve customers.
Right.
These examples really drive it home. AI isn't just about saving a bit of money here and there, it's transforming operations. And the data is clear. AI-ready firms are already outperforming. Which brings up a crucial point for everyone, really. It's not enough anymore to be just AI curious, watching from the sidelines.
Yeah.
You have to be AI ready, actively integrating it, using it strategically. The advantage is definitely shifting to those who are proactive.
AI ready, not just AI curious. That really sums it up, doesn't it? So, for you listening, how could AI impact your world, your business, your field, even outside PE? Where are those opportunities for automation or better CX or more profit that AI could unlock?
Good question for people to ponder.
Okay, now let's talk about finding alpha. Where can deal makers find that overlooked edge? Our sources point to this really interesting overlooked layer in the market, just below where everyone else is looking.
That's right. It's insightful because, everyone's crowding into the mid-market, right? Chasing those bigger, more obvious deals. But the real white space for sustainable alpha, as they put it, might be just below that, in the lower mid-market.
Okay, define that for us. What size are we talking?
Generally, the sweet spot, according to the sources, is companies with revenues between, say, $5 million and $150 million. So not tiny, but definitely not the headline-grabbing deals. But huge potential there, often untapped.
And what makes them so attractive? What are the characteristics?
Well, several things. First, they're often founder-led, which usually means a clear vision, strong culture, deep niche knowledge.
Right, passion.
Exactly. And crucially, they tend to be under the radar of the bigger PE firms. Less competition, which means potentially better entry prices, more room for smart investors to create value.
Okay, makes sense. Less of a bidding war.
Precisely. And here's the kicker, connecting back to our earlier points. They are often ripe for digital transformation.
Okay. That's where it gets really interesting for PE, isn't it?
Absolutely critical, especially if you look at Europe. There's a massive opportunity there. The sources state, pretty bluntly, that 90% of European SMEs lag U.S. peers by 10-plus years in tech adoption.
10 years. Wow. That's quite a gap.
It's huge, a significant chasm. And that means an enormous, largely untapped potential for creating value just through digitalization. The biggest opportunities seem to be in Germany, France, Spain, Italy, places where that digital gap is really pronounced. And the insight is key. Digitization doesn't just add value, it unlocks it. It's not just about small improvements. It's fundamental transformation, better operations, wider reach, automating things, maybe even new revenue streams they couldn't access before.
Right.
So for a PE firm, you bring the capital, the know-how, the strategy, and you can rapidly modernize these solid but maybe technologically stuck businesses into something much more efficient and high growth.
That's a powerful arbitrage opportunity, really. So the advice is pretty clear then. Double down on the lower mid-market.
That's the message.
It's where you can find that sustainable alpha.
Yeah.
Partly because there's less competition, and partly because these companies are often ready for that big digital leap. So for you listening, have you ever thought about the value hiding in these smaller, maybe less obvious companies? Maybe the big opportunity isn't where everyone's looking, but just, one layer down.
Yeah, definitely worth considering. And shifting slightly again, the sources also really stress that smart deal making now is focusing hard on sector strength and execution speed, much more than just trying to make broad macro calls.
Right. So less about predicting the whole economy, more about finding strong niches.
Exactly. I mean, macro stuff matters, sure. We saw the ECB cutting rates faster than the Fed, tariffs causing temporary freezes. But the sentiment, summed up by Carlyle's Steve Wise, is basically, we're done waiting.
We're done waiting. I like that. Sounds proactive.
It is. It signals a big mindset shift. Firms aren't just sitting back hoping for perfect conditions. They're making their own opportunities, being very targeted.
And do the sources point to specific sectors where this is happening, where the focus is?
They do. The resilient sectors getting the most attention right now are defense tech, cybersecurity, and health tech.
Okay, that makes sense. Areas with pretty steady demand drivers, less tied to the general economy.
Exactly. And what's interesting is, despite the slowdown and these shifts, there's still a mountain of dry powder out there, around $1.2 trillion globally.
Wow. So capital isn't the problem.
Not at all. The challenge is finding the right targets in these resilient sectors and then, crucially, executing the deal quickly and effectively in what's still a competitive space for good assets.
Right.
So it reinforces that idea. Sector strength and execution speed are the new edge. It's about being precise, being agile, moving away from just betting on the market towards really specific, high-conviction plays.
Absolutely. Finding that strong sector, then moving fast. That seems to be the winning formula now. So for you listening, how does this shift maybe change your own thinking or your career focus? Are there sectors you need to understand better or skills around deal speed you need to sharpen?
Good questions. And all these points really come together in some clear, actionable lessons for deal teams that we pulled from the sources. These aren't just observations, they're more like strategic imperatives.
Yeah, let's summarize those. They really tie it all together. First, be AI ready, not just AI curious. Get beyond just looking at AI. Actually integrate it in your firm, in your portfolio companies. Drive real value. Crucial. Second, double down on the lower mid-market. That overlooked sweet spot, especially ripe for digital transformation, holds that sustainable alpha.
Right. Don't ignore it.
Third, focus on resilient sectors, not macro forecasts. Target areas like defense tech, cybersecurity, health tech. Don't wait for the perfect economic wave.
Be proactive.
And finally, start small, fast. V1 to V8 won't be perfect, but momentum always wins. Avoid analysis paralysis. Get moving, iterate, build speed.
Love that last one. And linking it all together, it's clear the next PE cycle will reward clarity, speed, and conviction. This isn't a market for hesitation. You need a clear strategy, fast execution, and the conviction to see it through.
Which leads to that really provocative question from the source material. A great one for you to think about. Is your sourcing strategy shifting too?
Good question.
It's fundamental, really, given how fast things are changing, especially with those lower mid-market opportunities we talked about. And hey, for clear, actionable insights on AI, M&A, deal sourcing, insights that really cut through the noise, we strongly recommend following Finquest. They're the source behind many of these valuable perspectives we've discussed today.
Absolutely. We really hope this deep dive gave you a useful shortcut to understanding these critical shifts in private equity for the rest of 2025. From navigating liquidity issues to harnessing AI to finding those gems in the lower mid-market. Hopefully this equips you with some valuable knowledge.
Yeah, take a moment, reflect on what we covered. Think about how it might apply to your view of the market, maybe your job, your investment choices. We really appreciate you joining us for this deep dive.
Thanks for listening.
Acquiring a business? BizNexus simplifies it. Access thousands of updated opportunities in our DIY marketplace or supercharge team sourcing with OmniSource, your all-in-one platform for on-market, off-market, and coming-soon deals. Scale smarter today. Learn more or book a demo at www.biznexus.com.